welcome everyone. Thanks for joining us. I'm Adam Marks and I'm a Managing Director at Accenture focused on analytics and AI, principally in banking and in particular in compliance. And we're joined today by my colleague Mark Fungard. Mark, would you like to introduce yourself?
Sure, hi. I'm Mark Fungard. I'm the Global Head of Intelligence and Analytics at HSBC within Financial Crime Risk.
Great, and what we thought we would talk about today is a little bit around how AI and machine learning and advanced analytics more generally can be used within financial crime and within banking. An interesting topic, and one I think where if you just look at a couple of statistics actually that Mark and I were talking about the other day, a lot of the traditional methods used for identifying financial crime in banks are quite ineffective and have very high false positive rates. And then on the other side, if you look at the proportion of assets that are laundered that are actually seized by law enforcement, this is a tiny percentage, 1 or 2% maybe. So all of that cries out for some new techniques, and we're better to discuss those than CogX. So we thought we'd do this as a bit of a conversation. So I've got a couple of questions to ask Mark, but if you want to raise questions or engage in the conversation, please just shout out. So why don't we start by actually talking a little bit about the definition of AI as it relates to financial crime. Your thoughts, Mark?
Sure, yeah. I mean, I think, AI is, there's a whole conference today covering all sorts of aspects of it. And I think, for financial crime, there's certain aspects of it that really do, I think, apply a bit more than others. And certainly kind of the machine learning aspects and kind of the natural language processing aspects are definitely two areas I think that play very heavily in financial crime. I mean, I think, as Adam referenced, a lot of what you're looking for in financial crime is essentially pattern recognition. And you're essentially trying to understand these things that either do or don't comport to things you either know or need to know more about. So to me, the core of it is really sort of in that machine learning space, and then also in natural language processing space. So if you think about kind of the bank's data footprint and architecture, a bank like HSBC, we reckon we have something like 93 petabytes of data in the bank currently, and it goes, I've seen it bigger and bigger every year. And really what we get out of that, I think, is a lot of documents and a lot of things that don't lend themselves quite naturally to sort of being treated like data. So a lot of it is, think about things like trade records and things where, really a natural language processing approach is quite good. I mean, I think, other kinds of things, other parts of the bank are very interested in other parts of AI, chatbots and the like. In a financial crime space, that's a little bit less, because by the time we're talking to customers, it's already, the situation is quite advanced. So I really think those areas particularly jump out at me.
Okay. And I mean, one of the things that we were talking about is we wanted to particularly pull out some of the challenges around using machine learning and some of the other techniques. But before we do that, can we just talk a bit about some of the benefits of AI and machine learning in particular?
Yeah, well, I mean, Adam, the way you teed up the discussion, I think is exactly the right place to start, which is, if you take a step back and say, okay, how does industry try to tackle, the real consequences and difficulties of financial crime? We try quite hard and we work very hard at it, and we as an institution and our peers have worked very hard at this. But if you look at it as an enterprise, what you say is, we reckon across industry, so take transaction monitoring, which is one particular way of looking at the problem, looking at individual transactions and looking for money laundering within them. We reckon most in the industry will do a conversion rate to a suspicious activity report of about 5 to 10%. And then from there, Europol said publicly about 10% of those get looked at. So you're already down to kind of a 1% call, and then if the seizure rates look like they're 1%, so it's really not a great place to start. I mean, so the benefits I think are pretty astronomical. I mean, just, to sort of simply say the kinds of techniques which exist. We're not talking about creating something fundamentally new. The benefits are really at scale being able to pick out in a much more narrow fashion what actual financial crime looks like. So that's got a bunch of benefits. The first of which is you actually focus on where real financial crime is. So instead of getting caught up with a huge enterprise that at some point is just trying to document all the reasons you weren't interested, it lets you target much more directly at kind of where you are. It also, if you understand this to a greater extent, it actually makes you able to kind of take on and go into places where otherwise you couldn't actually manage the risk. So there's a benefit potentially for financial inclusion, actually, in thinking about how we can actually go into places that would otherwise be high risk, but that the techniques would let you actually parse. So I mean, I think those are some of the obvious benefits. There's obviously also one around being able to give better, more advanced cases to law enforcement so they can actually go take more direct action as opposed to, here's a transaction from a couple months ago that we thought might be suspicious.
And of course, this isn't a victimless crime. We're talking about the financing of terrorism, we're talking about human trafficking, modern day slavery, drug crime being the things that underpin this. So important to find it.
And that's, I think, for me, that's sort of why this is kind of a compelling place to be in this space. I mean, I'm sure you could walk around the pavilion today and hear all kinds of really interesting use cases as to what you might do with AI. One of the really compelling things about financial crime for me is it does have a real human impact. I mean, this isn't just money laundering. It is, human trafficking is a great example. So is narco-crime.
Yeah. And I think what we wanted to pick up now was to talk about some of the challenges that we see with rolling out these types of techniques, because whilst the benefits sound obvious, the approach to rolling it out, whether we're looking at some of the practical considerations around data, for example, but what we wanted to focus on today was some of the ethics around and the being responsible about using AI, and maybe talking about some of the biases, how humans interact with machines, and some of the regulatory challenges.
Sure.
Well, some thoughts?
Yeah, I mean, I think, so from my perspective, you've touched on, I think, exactly the right kind of topics. The first one is the broader ethical consideration that I think the whole industry now is beginning to kind of grapple with, which is, there's no such thing as unbiased. Naturally, as you start to look for certain typologies of activity, you could unwittingly introduce biases that end up taking you places you'd rather not go. So that's sort of the first question is, not only can we do this, but should we, and how should we? And then the second question from a regulatory perspective is, we're being looked at as an institution and certainly as an industry to make sure that we're complying with all our obligations to be protecting the system from these kinds of activities. No model is perfect. Any machine learning will have a certain amount of false positive and false negative. When you're in that situation, how can you explain to the regulator what it was that the machine did or didn't want, that the code did or didn't pick up on, and what that actually looks and feels like? Because I think, it's much easier in some ways to be able to say, well, here is every step along the way that happens in our current process, and here's where it went wrong. It's a bit more difficult when you start talking about, we're running a random forest model and we've got a certain number of hidden layers and the machine kind of wanted the data that it wanted. It becomes a little bit more difficult to sort of explain that as a regulated institution.
Although it's quite interesting that humans also have biases. So we're actually dealing with one set of conscious and unconscious biases in humans, and then another set with humans and machines added together. And how do you tell which is better or worse?
And that's actually a really interesting point, right? Which is, any process that, not just in a bank, but certainly in a bank, any process where you're relying on hundreds or thousands of individual human beings to make decisions, you're baking an error rate into that. Just, people will come in and they'll be in a bad mood, or they'll be bored, or their mind will be, off the topic for a second. So you've got an error baked into that. I don't know, it's sometimes the conversation around some of the new techniques sort of presumes it has to be error-free. Well, of course it doesn't. It just has to be better than what you're doing now. So I think that's, a key takeaway.
Yeah. So there's one final topic I think we did want to pick up on, which was the regulator's view of all of this. So at the moment, there's a series of regulatory required techniques that we discussed at the outset that aren't really getting the results that either the regulators or perhaps more importantly the public are really looking for. As we move into this new world, the regulators have to engage, catch up perhaps, and deal with some of these challenges, for example, explainability. What are your thoughts on that process?
Yeah, it's a very timely topic now, and I think the conversation from my perspective over the past couple of years has really moved from you've got these obligations, you should fulfill them, which of course we should and do, to a place where you say, okay, well, you know, there's actually a bit more opportunity for kind of a public-private discussion here, because we don't really know exactly what techniques we need to muster. We don't really know exactly how to build that yet. We're entering into that space, and the regulators are along that journey with us. And you know, and as much as we're trying to figure out how we want to do it, we also want to work with them to figure out how we should be regulated in that space. And again, that's not an HSBC conversation. That's an industry-wide regulatory conversation, and I think that's starting to happen. I think there's, you know, a lot of discussion that then needs to happen to say, well, what is it that's the correct outcome in this kind of world? You know, is it important kind of how many layers the model had and exactly how did that work, or is it important that we've got something here that we can verify and validate and stand behind? And that's, you know, we'll see where that conversation takes us. But I think it's definitely an opportunity for us to kind of have a really open dialogue about that.
And it seems that certainly the FCA we've seen as being more open to that more recently, and actually publicly stating that they wish to engage in that conversation. But it does feel as if the way in which you explain the models and explain the decisions that are ultimately taken is going to be an important part of both the governance and the data science. I mean, both of those are going to have to engage on that.
Yeah, exactly.
Yeah. Good. Any closing remarks from you?
I mean, just one, thanks for taking the time to kind of listen to us. I mean, it's a topic that I find really exciting. I'm actually really pleased I get to spend some time kind of working on this, because I do think, you know, as I said at the beginning, I do think this is an area where we can actually not just change the bank or change banking, but actually change sort of how the world tackles this really incredible problem. I mean, I think, you know, from my own perspective, I got into this topic many years ago now, because when I started off doing counterterrorism work, but when I looked at it, the money flows and the international illicit finance underneath was kind of the lifeblood of the whole enterprise. It's why criminals are in business, right? They're not in business because they want to be the best criminal. They want to make the most money. And I really do think this gives us some opportunity to actually really begin to kind of get at those core pieces. And so I happen to find that really compelling. I hope you all enjoyed the chat, and I hope you work on it too.
Yeah, and I think from my perspective, I just, as a closing remark, I think it is, you know, individual banks working on it, but the industry working on it with the regulators, with law enforcement. I think that's the point where we start to see that level of data sharing and analytics sharing that can get to, you know, really trying to identify some of these crimes through entirely new techniques. So, good. All right. Thank you all for joining. Thanks.